Welcome back to the channel. My name is Derek Coffey and I'm the founder of FWP. And a couple weeks ago, I put out a video going over how retiring at 55 can affect your Social Security benefit. On that video, I had someone ask the question about a spousal benefit and if they were to file for their Social Security benefit at 62, would it affect their wife's spousal benefit if she decided to file for it at 67? The short answer to that question is no, but once I read it, it got me thinking that there are a lot of people out there that may not know anything about a spousal benefit. If a spousal benefit fits in your plan, you need to understand the inner workings of it. Social Security itself, for a normal person who's worked their whole entire career, is confusing enough, but having to intertwine a spousal benefit just adds another layer of complexity. In this video, we're going to get into the things that you need to know about a spousal benefit. That way you can include it in your plan and get the most out of Social Security. Stay tuned. So the first thing that we want to go over is what exactly is a spousal benefit. The whole purpose of a spousal benefit is to allow spouses who have no earnings or little earnings throughout their working career to receive some level of Social Security income. Now, the spousal benefit itself is based on the earnings history of the working spouse. So if you were a stay-at-home parent or you were a stay-at-home spouse your entire life, then your benefit is going to be based upon what the working spouse earned. The maximum amount of spousal benefit that you can bring in is 50% of the working spouse's full retirement age benefit, or PIA. So if your spouse worked and they're eligible for $2,500 a month in Social Security at age 67 or whatever their full retirement age is, then your spousal benefit, as long as you wait until age 67, is going to be $1,250. Now, before you run to the Social Security Administration and file for the spousal benefit, there are some rules that you need to be aware of. Rule number one is you have to be 62 years old to begin receiving your spousal benefit. Now, there are some instances where you can start pulling this benefit at age 60, but the requirements are so specific that it's only going to apply to a handful of people. This age requirement has to be kept in mind if there's an age gap between you and the working spouse. If the working spouse decides to retire at 62 and pull their benefit as soon as they possibly can, and you're only 60 years old, then you're going to have to wait those 2 additional years before you can file for your spousal benefit. Rule number 2, you have to wait until the working spouse begins pulling their benefit before you can access the spousal benefit. So if the working spouse decides to wait until their full retirement age to start pulling their benefit, you will also have to wait until their full retirement age to pull your spousal benefit. If they want to delay until age 70 to get those delayed credits, then you're going to have to wait until that working spouse is receiving their check. Speaking of delaying that Social Security benefit, the working spouse can delay as long as they want, but it's not going to make any difference in the maximum amount of spousal benefit that you can receive. It will always be 50% of the working spouse's primary insurance amount. Rule number 3, you have to be married at least 1 year to claim a spousal benefit on their earnings history. So you can't just find someone and run to the courthouse to be lawfully wed and then you get a spousal benefit. That's not how it works. Now, on the flip side of that, for rule number 4, if you were married and got divorced, then you may be eligible for a spousal benefit as long as your marriage lasted for at least 10 years. Now, this differs from pulling a normal spousal benefit. You do not have to wait for your ex-spouse to start claiming their Social Security before you get your spousal benefit. And I also don't want you to worry about filing for it and then your ex-spouse being alerted or be upset in any way. The Social Security Administration is not going to alert them that you started pulling a spousal benefit, and it's also not going to affect your ex-spouse's benefit to begin with. So if you are eligible for your spousal benefit, then go get it. Now, the eligibility requirements are a little bit different. You have to have been married for 10 years. You have to be unmarried, meaning you didn't get married again. You also have to be 62 years old, and the divorce had to have happened at least 2 years ago. So if you checked all of those boxes, go to the Social Security office and get your spousal benefit. So how does the Social Security Administration calculate your spousal benefit? Well, it's all going to be based on if you're eligible for your own benefit based on your own earnings history. So option number one is you don't have an earnings history or you didn't work long enough to receive Social Security. If that's the case, then your benefit calculation is very straightforward. They take the working spouse's primary insurance amount, or the amount that they're eligible for at age 67 if you were born after 1960, and they multiply that by 50%. For example, if the working spouse was eligible for $2,500 at age 67, then you would be eligible for $1,250 when you turn 67. Now, the other option is if you did work for a period of time or you earn significantly less than the higher earning spouse. If that's the case, then you're going to get paid your Social Security benefit based on your own earnings history. Now, if that amount does not equal what a spousal benefit would have equaled, then the Social Security Administration is going to make that up to you. They're going to cap it off. So let's say that you worked enough and paid enough into the system that you're eligible for $1,000 at your full retirement age. We know that if the higher earning spouse is eligible for $2,500, then your total benefit should equal $1,250. What's going to happen is the Social Security Administration is going to pay you your $1,000 per month, but then they're also going to add to it $250 a month of a spousal benefit. So no matter what situation you fall in, the Social Security Administration is going to get you to that 50% number at your full retirement age. So when should you go about pulling your spousal benefit? Well, it depends. It all depends on you and your specific situation. But before you make any final decisions, I do want you to be aware of any reductions that you could face. As we went over, at your full retirement age, you can receive 50% of the working spouse's PIA, or their full retirement age amount, as a spousal benefit. If you decide to pull it earlier than that, then that figure is going to go down. If you decide to pull it at age 66, then you're only going to receive 45.84% of that. And using the example we just went over, that reduces your monthly payment to $1,164. This occurs all the way down to age 62. So if you decide to pull your spousal benefit at age 62, you're only going to receive 32.5% of your spouse's PIA. In the same example, that's going to be $813 a month. So before you make that final decision on pulling that spousal benefit, you need to take these reductions into account. Now, to answer the question that was asked at the very beginning of the video, your spousal benefit is not affected if your spouse pulls their Social Security benefit early. They will receive the reductions that are associated with their decision to file. It will not have any impact on your spousal benefit. Yes, their decision to file could impact survivor benefits. We're not going over that in this video. I'll do a video about it on its own. But when it comes to spousal benefits specifically, the age at which your working spouse retires has no impact on what you are eligible to receive as a spousal benefit. It's all based on you. The last thing that I want to go over with you when it comes to spousal benefits and Social Security benefits in general is that there is no such thing as maximizing your Social Security benefit. The reason that I say this is because you could only maximize your Social Security if you knew when you were going to pass away. If you knew the exact date and time, you could back your way into getting the absolute maximum out of Social Security. But since we don't know when that date is going to be, I want you to change your perspective on Social Security from a maximizing mindset to an optimizing mindset. What do I mean by this? What I want you to do is figure out where all of your other money is going to come from, a pension, your investment accounts, whatever. I want you to then take your Social Security and fill in that gap. Now, there are plenty of people that are going to take their Social Security benefit at 62, no questions asked, and I really don't have a problem with that, especially if they understand that the benefit is reduced permanently, it's going to affect survivor benefits, and they have enough cash flow to pay for their living expenses, then I can't really fault them. But there are other people that are fairly well convinced that they're going to live until they're 90 or 100 years old. If that's the case, you have to take into account what your investments look like, what all of your assets look like, what the tax treatment of those assets is going to look like, and then incorporate your Social Security benefit. Your decision to file for Social Security is a personal decision. You have to run the numbers to figure out what's going to work out best for you. I want to thank you so much for tuning in. If this video or any of the other videos that I've put out has provided you value, then hit that subscribe button. If you know someone that really doesn't have much of an earnings history and they're kind of worried about what their Social Security is going to look like, then send this video to them. Maybe it'll help them understand what is available to them. But I thank you so much for tuning in. I'll talk to you soon.